Okay, I want to personally apologize for not getting my stock updates done yesterday. Yesterday was beyond crazy, and I kept trying to get it done throughout the day and just could not get it in. So I do apologize. I will actually do something on Saturday, which is going to go over some of the markets, pre-market stuff, so I can have another update to make sure I've got 5 days each week still, as I tell each person I'm going to do. So let's go here to the bonds, see what's going on with bonds and the Fed. For bonds, it's not about the Fed anymore. Okay. So we're going to go ahead and read through this and we'll see what that's about up here. I think there's a commercial or something like that that's probably going to be entering in on that. Yep, there's another advertisement, so let me mute that down. So that
what happens if a small company gets big, or tanks big, or innovates big? Imagine a company's future with the future.
I don't think it wants me to mute this up. How about that one? We're going to listen to the commercial regardless. And then I'm going to tell you how long you're going to listen to it for.
Go Jim, it really is a bond rally that just will not quit. What's going on?
Remember how cute it was at the beginning of the year when we kind of thought that the tapering of QE would potentially have the Fed lose control of long-end rates? And the opposite's happened. As a matter of fact, now the tapering of QE, in my mind, is a secondary influencer of the long end. Right now, it's about Europe. The money just keeps getting flooded into the system, and it has to find yield. And we say, wow, it's hit a 214 low. It doesn't look low compared to a lot of the European yields, so in my opinion, it probably goes a little lower still.
What about you, Grizz? Do you see a bottom ahead for yields, or do you think it just keeps on going low, Jim was saying?
You know, as Jimmy said, and I listened to him earlier when I wasn't on the show, you know, Europe really is dictating what's going on here. It's no longer about QE at this point, and absolutely I think it could go lower. It's definitely bad for savers in this market. Jimmy, we're getting as much, rate at the bank that we are just putting the money under our mattress like the old Italians used to do. And
no doubt about it. That's the point. Right, that's the point, Chris, is that they're forcing us into taking risks.
That's exactly
and it's not just the Fed, that's the culprit, but the other central banks as well.
Yeah, so
all right, all the talking heads, let's get past that. So basically what they're saying here is, in layman's terms, my goodness, is the bond market is not performing like it's supposed to, and I'll read through here and it'll kind of tie in. And that QE and all that stuff, I believe that's talking about the different quarters of the year. But it says, it used to be common knowledge that the Treasury trade was all about the Federal Reserve, meaning the Federal Reserve controlled everything that's happening basically with the flow, ebb and flow of the U.S. Treasury. Once the Fed stopped buying bonds and started talking about raising rates, yields would return to more historical normal levels, and the bond rally would finally end. At least that's what Wall Street used to think. This week, yields for long-term bonds, specifically 30-year Treasuries, have dropped to lowest levels of the year. Even as the Fed continues to be on pace to end quantitative easing. Oh, that's what QE is, quantitative easing, and likely raise rates in the first half of 2015. Most recently, Treasuries have been driven by the historical lows seen in the European yields. Yields in the Eurozone have plunged due to the poor economic conditions and expectations the European Central Bank may take action by easing. And when faced with the Italian 30-year yield of 3.6% or German 30-year yield of 1.7%, let's kind of blow past this so we can get to the heart of it. Sorry about that, y'all. I'm just trying to read through this so I can kind of make it as simple as possible. From what I'm gathering is the European Central Bank is actually affecting our bond market instead of our Federal Reserve doing that. And so because of this, then the Federal Reserve, who used to be able to control the easing or the bond market, is no longer in control like they thought they were. So you're not necessarily going to get the return from the bond market, which is a safer way of investing, that you normally would, and it's forcing you, which is what they were talking about up here, into going into riskier stocks to be able to get a decent return on your money, which is crazy because it's just making people put their money in harm's way. So you definitely want to just take a peek at what's going on with the bond market and see what's going on there, and maybe find other places to put your money instead of bonds if you want to have a safe, secure return. I mean, you can do CDs, you can put it in fixed annuities, you can do whatever products you want to do. That's between what you want to do. You research that on your own. So all I want to do is kind of give you what I'm doing with my own stock trade. So let me go into my stock account real quick. Well, let's go here to pre-markets. I know that may have been kind of confusing, but ultimately, if you don't feel the bonds are going to give you a decent return, look at other avenues. Dow's up, S&P's up, Russell's up, Europe's up, Asia Pacific decent, commodities kind of a little down, currencies okay, U.S. Treasury's up, sectors are down, indices are down, and the global indices are up. All right, so let's go here to my portfolio. Again, we're looking at my Burger King because of this Warren Buffett information. So let's see what's going on with that. Yeah, I'm still not doing good. I got it at $32 based upon the news, and this thing has went down to $31.31. So everything I've got right now is making money except this doggone Burger King. So let me go back out here real quick to look up Burger King. Burger King ticker. Actually, I could have did that from over here. Probably would have been better if I just showed you from here, because you'll have your own account too. So let me just go here so I can see the trends and what's going on with the stock. Alright, so what's the target? Oh wow. The 1 year target is 31.33. This is a great lesson when you're buying stock. When you look at the target, that's the estimated amount that they expect this stock to get to in that target year. Well, it was targeted to hit 31.33, and I didn't look at that like an idiot. And if you look at where it's at right now, it's at 31.31. So they're not far off of target. But what did I buy it for? I bought it for $32.58. Let me go back there so you can see that again. It's a great lesson. I bought this for $32.58, but the target on this thing was at 30. And I mean, the market right now is at 31.31, but the target, the expected amount that the company thought that they would hit, was 31.33. So I mean, they're not far off of their expected target that they kind of promote to the stock market, so that you would know kind of how much you would make and what the dividends would be and stuff like that. But I actually bought it above the target. So we're going to probably take a loss on this one and kind of roll out of this one. So we're going to go ahead and sell this. And then we'll come back. If I see it, well, let me sell it first, and then I'll tell you what I'm trying to do here. So let me go ahead and execute this. So I'm going to actually lose. I'm cutting my losses, though. Sometimes you got to cut your losses as a trader and just get out. So let me go ahead and make that trade now. So I'm going to lose $253 on that. But that's the risk you take. So I'm going to cut my loss on that. Now, if this price, which is at 31.31, and I bought it at 32, so they made money on me. I was in the sucker game this time. But if this price goes down to, let's say, like 30 or 29, then I'll come back and buy it again, and then try to ride it out to a 31 or 31.33 targeted rate and try to make my money back and move it from there. But right now I want to move on and just kind of cut my losses and try to make that money back up somewhere else. So 253.82 is what I lost, so I need to make sure I make that money back up somewhere else. Alright, that's all I have. I tried to go a little bit longer today to offset from yesterday, and then I'll do some more stuff on Saturday. Have a wonderful day. Again, 5 minutes a day over time, being consistent will make you dangerous. Have a great day.